South Indian Bank is a bank currently worth around 8,583 crores, that its market value. Current price of one share is 32.8 rupees, and the bank is currently trading at a discount to its book value. So its book value, that is assets minus liabilities, is 39.8 rupees per share at a significant discount is currently the current price to book value. Return on equity is a pretty solid 13.8, while return on capital employed is really not that solid, 6.5%. The price to earnings ratio is a really small 6.5. So, is this company undervalued or is it not undervalued? If you look at its profit and loss, you can see that the last decade's compounded sales growth of 6% is extremely low. Last 5 years, 4% is still extremely low. But profit growth looks very impressive, 16%, way more than the sales growth. Is this something good? uh, Profit growth has significantly outpaced sales growth. Now, if you want to see a visualization of these sales, here's a visualization of the sales. The blue things are the quarterly sales. So here you can see, like March 13 as an example, March 2013, we have sales of 1,165.41 crores. The green line is the net profit margins, and the yellow line is the gross profit margins. Is it the gross profit margins? Sorry, no, the operating profit margins is that line. So you can see what we have here. We have a growing period, right? We have a growing period. You see 2011 is growth. Then we see a bit of a still growing period, but a smaller pace of growth as we saw earlier till 2019. Yes, see 2019. Then we move here, we see a decline in profitability, big declines, minus negative profit margins. You see a decline because of COVID and all of that. And then you see the post COVID era where we see significantly higher profitable bank with higher sales growth, though not the best overall quarter growth. You can see stabilized a bit, but we have seen growth and the profits have been shown there. Now, what is this bank? So, this is a South Indian focused bank, particularly in corporate deposits, sorry, corporate loans. Its total loan book. Its current loan book is valued at around 89,198 crores. That's its total loan book. Then you may notice one thing. Disbursements, how are they double the loan book? Now, disbursements is the amount of loans actually given out during the period of time discussed. So let's say for one quarter. See quarter four fiscal year 2025, 1.6 lakh 1.6 lakh crores of disbursements. How is the number of loans given out so much more than the overall loan book? My guess, many of its loans are for a short period of time. So, disbursements only discusses the amount of loans given out. It does not discuss the amount of loans repaid. So, many of its loans must be repaid in a very short period of time. So, disbursements going out, but a lot of it is short term, so it's getting repaid very quickly, which leads the net disbursements, that is disbursement given out versus loans repaid, will be very low. That's why loan book will be so much smaller. Then you can see 42% of its loans is corporate loans. It's given to corporates. 27% is given to the personal segment, retail loans. Agriculture is 17% and business loans is 14%. So 42% loans are corporate loans. Then, very interesting. 30% of its loans are of a ticket size of more than 100 crore rupees. 30% of its loans have an average value of 100 crore rupees. Like we discussed earlier, see, disbursements are so much higher. 100 crore plus 30% loans. Corporate loans of 42%. So these corporate loans must be very short duration. So they must be getting repaid very, very quickly. Okay. So 30% of its loans are more than 100 crores. 51% are less than 5 crores. That can mean 10,000. That can mean, I don't know, 40. No, that can mean 4.9 crores. And you can see Between 25 and 100 crores, you have 8% of loans, and 11% of loans are between 5 and 25 crores. So the average ticket size of the loan, average size of a loan must be massive, massive, massive. Yeah, let's continue. Let's continue more about the information of this loan. Now we have 948 branches across India. You see the colors, the red color, it shows the density, the number of branches, where are they? And you can see a massive concentration in the south. We have two places with branches, more than 100. We have Kerala and we have Tamil Nadu. Then in all these other states, I think this is Karnataka, Maharashtra, Gujarat. We move up, lesser concentration in north and way more of its concentration in south, especially Kerala. Now you can see the branch split, 49% is in semi-urban. The rest you can pause and see here. You can see the loan book. Where is the loan book? 30% of loan books is in Kerala. Okay, 33% is also in South India, but except Kerala, and 70%, and the rest of India is 37%. Now they're trying to expand outside Kerala. So in quarter one fiscal year 2025, that is 12 months ago, Kerala constituted 34% of total loans. 82,000 was the total loans. 89,000 crores is the total loan book, and 30%. So they're trying to expand outside Kerala. That is one of the objectives of the bank, is to expand outside Kerala. Then NPAs, non-performing assets. What are the assets here? Loans. So loans which have gone bad are non-performing assets. Lower this number, the better. GNPA, gross NPA. These are in percentages. So they are in percentage of total loans. So gross NPAs are the total amount percentage of total loans which have gone bad, meaning customer is not paying back the loan, unable to pay back the loan. Gross NPAs gone down significantly from 6.9% in March 2021, June 2025, 3.15. That is a really nice positive for the bank. Declining non-performing assets. Net NPAs, if you're wondering what net NPS is, net, so something has been minus. So gross NPA, total amount of bad loans, minus the funds set aside to cover these bad loans, or the funds set aside to cover some of these bad loans. So after that, whatever amount of bad loans is left after these funds have been set aside, that is a net NPA. Even that has been declining significantly, 0.68. That is a positive for the bank. Then provision coverage ratio. The provisions. What is a provision? The fund set aside to cover something. So the provisions covering the bad loans. Okay, provisions as a percentage of the bad loans. You can see it has reached to 88.8%, including the technical write-off, but excluding it 78.9%. Basically, very, very healthy provision coverage ratio, especially that 78.9%, in, which is excluding the technical write-off, even after that 78.9%. Then recoveries of loans. Loans have gone bad. Are they getting recovered? Here it shows some amount is always getting recovered. So 1500 crores worth of loans, bad loans recovered. 255 crores worth of bad loans, loans gone bad, that amount was recovered. Then deposits 1.12 1,12,922 crores worth of deposits with this bank. And you can see this is growing slightly. It is growing, but the growth is not the most spectacular. Then you can see red are the retail deposits. This blue, you can see, is the bulk deposits. What is this gray? Savings. We're talking about savings, very important. Current account, savings accounts. Now you may see it's a percentage. So it's a percentage of total deposits. So the current account and savings account as a percentage of total deposits. This is very important for a bank because banks can pay, or they pay a very low rate of interest on savings account and current account. So higher number of current account and savings account, less interest you have to actually pay out, because again, savings account and current account both really low rate of interest that the depositors receive. So you can see 32.6%. That's a pretty good. That is actually a pretty good current account savings account, and it's holding up. You can see the percentage: 32.06% quarter one fiscal 2026. It is held at 31%. So that is uh, that's good. That's good. Then what else did we need to cover? Yes, an overview. Okay, let's have a nice overview. Total business. This is advances plus deposits. So you can see advances plus deposits is the total business. It has also grown. It has also grown, reached around 2 lakh 2,119 crore rupees. Gross advances has grown, as you can see. Deposits have grown. Oh, sorry, there's a disbursements. Okay, but gross advances have also shown growth, actual growth, which is really nice. Net interest income. What is net interest income? It's net. Again, something has been minus, subtracted. So interest it has received on loans. Okay. Interest that the bank received on its loans minus the interest it paid out on deposits and the interest it paid out on loans that it took from other financial institutions. So it's net. Again, a really important figure for bank. This is the main source of income for the bank. So net interest income. Okay, we don't have before COVID, which is a shame, data right now. But there is growth. There is growth, maybe slowed down a bit. Who knows? Profit after tax has shown better growth. Look at that. This era, buy.